Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes, and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Hi, this is Anthony Wolfenden, Tax Financial Advisor. This is Tax Time at Wealth Coffee Chats. Good morning, everyone. This is Tax Time at Wealth Coffee Chats. Good morning, everyone. I wanted to run through some more information about capital gains tax exemptions for principal places of residence. This one's an interesting little wrinkle that many people don't know, so we thought we'd share it. This one's an interesting little wrinkle that many people don't know, so we thought we'd share it. Everyone's probably familiar with the standard exemption for capital gains tax for people's homes. If you purchase a property with the intention of making your home, and you do in fact do that, and then you live in that home and you sell it sometime later, whatever gain you make on that property is not subject to capital gains tax under current regulations. There is also a 6-year rule where you can move out of that property, and so long as you don't acquire a different principal place of residence, you might be renting, you might be living offshore, you might be doing a number of other things. The exemption continues to carry forward so long as you either sell the property before the 6 years are up or move back into it. And you can in fact change or chain those 6-year periods so long as you meet all of the requirements for that exemption. And that carries on. If you stay out of the property for more than 6 years, if you don't sell it before the 6 years are up, then you will pay capital gains tax on the period that it doesn't apply for the exemption. So at the 6th year, if you're not back into it, if you haven't sold it, capital gains tax starts at the cost base there and carries on until the property is sold. And again, standard marginal rates, discounts, depending on who owns it, and so forth. Where does this get a little bit interesting? Well, what if you're getting a little bit older in life? Potentially aged care is something you need to look at, and you're moving because of that. You might be moving into a place that was never your principal place of residence. You might be moving into an investment property that's near a hospital that you own. You might be buying something that you don't live in first, someone else in the family lives in, who knows? But in the end, you're coming towards the end of your life, and the property you're living in is something you own. It might have been used to generate income. It might not have before, who knows? But you're living in it potentially right before you pass away. You might go into assisted living right at the end, or some sort of aged care or palliative care, but the last place you owned and lived in before you pass away may actually become a principal place of residence, in the sense that it may not be subject to capital gains tax when sold by your beneficiaries. Interesting. So what does that mean? Pass away and the property you've made the most money on before you go, all jokes aside, that would be a consideration. So how does this work? The property's nature before its use by you is not so important. Whether it was used to generate an income, whether it ever had a principal place of residence exemption initially, that's not really the point. The point is, before you pass, you own the property, and it's the last place you own that you live in before end of life care, I guess. Fantastic. That's pretty easy to figure out. The property is willed. There's a beneficiary through the estate or through probate. So long as that party sells the property or moves into it, makes it their principal place of residence, before 2 years are up after your passing, and that is settlement of the property under estate rules, I believe, then that property is not subject to capital gains tax on sale by the beneficiary, no matter what its previous use was. So this is an interesting wrinkle that I guess exceptionally good estate planning and lifestyle management might help take advantage of, but it's certainly something most people don't know. So I thought I'd spend a very brief time in Wealth Coffee Chats giving you an insight into that one, because it may be useful for planning purposes. Okay, that's it. Short one from Anthony on tax time for Wealth Coffee Chats. Have a great day and do some good estate planning.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.